FY21 did see the impact of the COVID pandemic, and we did see the Q1 GDP to drop the sharpest in FY21 to the lowest in several decades, the lowest since independence. In fact, for Q4, it's like GDP is likely to turn marginally positive at an average estimate of 0.8%. To note that in Q3 itself, India's GDP did turn positive to 0.4%, but estimates are still some of the estimates for Q4 GDP do range between minus 2.2% to an expansion of 2%. So yes, some of the economists are still expecting a slight contraction even in Q4 GDP. For FY21, the GDP is seen to contract anywhere between minus 7 to minus 8%, and do recall CSO's second advance estimate did peg the FY21 GDP contraction at minus 8%. In terms of the factors, well, yes, because of the low base of March 2020, Q4 GVA for industry and services should be better, but within the services sector, the contact sensitive sectors of course have been fairly impacted. For example, the hotel, airline, hospitality, trade and travel have been impacted, and that should be pulling on the GDP, but government spending should be supporting GDP along with the agri growth, and also along with that, resilient corporate earnings for Q4 should also be supporting the overall industry sector. If you look at the high frequency indicators, well, most of the high frequency indicators have posted a recovery from especially from end of Q2 onwards, and they were also showing a good picture, a recovery mode in Q4, that is Jan to March quarter. But since the time of April to May, early May rather, the high frequency indicators are showing a mixed picture, and hence this is something that we should be watching out for. Besides that, of course, the extent of contraction of overall FY21 would be keenly watched out for. The focus, of course, is on FY22 GDP with the ongoing COVID second wave. How much would be the impact on FY22 GDP, as most of the economists have already gone ahead and cut the FY22 GDP forecast to sub 10%. For instance, if you look at quite a lot of the economists, JP Morgan estimates FY22 GDP at 9%, Barclays have further cut it to 9.2%, S&P and Moody's are expecting 9.8 and 9.3% respectively for FY22. It is RBI which has still retained the GDP forecast at 10.5%, and this week we should be seeing RBI's monetary policy outcome itself, and therein this is one crucial data point or commentary to be watched out for by the Reserve Bank of India. Will they go ahead and cut the FY22 GDP forecast from their expectation of 10.5%? And of course, there are expectations that they would go ahead and still retain status quo in terms of the rates and keep liquidity as well as the overall monetary policy stance fairly accommodative.